Hello viewers, my name is Mrs. Boqwana Mzili. I am from Victoria Girls High School in Makhanda from the Sarah Baartman district. Welcome to the ECDOE broadcast studio. Today's lesson is about the statement of comprehensive income. I will be covering this topic for your full understanding. Right, let's look at the introduction. Remember that with the statement of comprehensive income, this is calculating the net profit or loss for the year. It only consists of incomes and expenses, so we don't have any other items on the income statement. Remember that when we have accrued income and accrued expenses, these are added on because this is for the current financial year. And when we have prepaid expenses, income received in advance, and consumable stores on hand, these are subtracted because these are for the following financial year. Now, let's have a look at our format for the statement of comprehensive income. We start with sales. With our sales, we need to remember to minus our debtors' allowances, as we always know with our sales. After that, we minus our cost of sales. Our cost of sales is our first bracket out of 4 brackets. Let's first quickly go through the format of the statement of comprehensive income. And then we work out our gross profit. So remember that gross profit is always sales minus cost of sales. In an exam, they can either ask you to work out the sales or the cost of sales by giving you the markup percentage, which will help you to calculate either or. After that, we look at our other operating income. Our other operating income looks at our rent income, our bad debts recovered, our commission income, so any other income that the business makes to get more money. Once we've calculated all the other operating income, we then add them together to give us our gross operating income. Our gross operating income is our gross profit plus our other operating income. After that, we have our second bracket. Our second bracket is going to be our operating expenses. Now, this is a list of all the expenses that we have, which ranges from salaries and wages, depreciation, bad debts, any other expense that we have, we will add them together and bring them to this bracket. After that, we work out our operating profit. Our operating profit will be our income minus our expenses. After that, we work out our interest income. Our interest income consists of any interest we are getting from the bank for our current account, from a fixed deposit, or interest on overdue debtors. Then after that, we work out our profit before interest expense. So we add these two together to give us our profit before interest expense. Interest expense is our third bracket, where we minus the interest of the loan that we have. Then we work out our profit before tax. And then we also minus our last bracket is income tax. And this is where we now work out our net profit or loss after tax. Right, so there are a few transactions that we are going to look at right now, which are the commonly examined transactions. The first one is directors' fees, then audit fees, then rent income, then advertising. Then we'll look at a profit or loss on asset disposal, and we'll also look at provision for bad debts adjustment. Okay, let's have a look at the first example. Our first example, all the examples will be from the 1st of March to the 28th of Feb, that is our year. Our first example is directors' fees. Our directors' fees, according to the trial balance, is 660,000 Rand. The company has 3 directors. Okay, 2 of them earn the same monthly fee, and they have been paid for the whole year. The 1 director earns 20% less than the 2 directors. So this director started on the 1st of September and is owed for the last 3 months of the year. And we must provide for the outstanding fees. So let's have a look at the solution, how we work that out. So firstly, we have 3 directors, D1, D2, and D3. D1 got paid for 12 months, D2 for 12 months, and D3 only for 3 months. So when we solve for X, we have 24X, which is for D1 and D2. And for D3, it's going to be 3X, and we open a bracket and we say 0.8. This is because he gets 20% less than D1 and D2. And all of this must equal to 660,000. So when you add that together, we get 26.4x, which equals to 660,000. Therefore, x is equal to 25,000 Rand, and this is for D1 and D2. And therefore, D3, which is who we are looking for, is 80% of 25,000, and that gives us 20,000 per month. We multiply that by 3, and we get the answer to be 60,000 Rand. So this is what we are looking for. 60,000 Rand is the accrued expense, and because it's an accrued expense, we need to add it on to our director's fees in our income statement. Let's have a look at the second solution. Right. So our second example is audit fees. The example reads as follows. Our auditors are still owed 25% of their fees, and we need to provide for the outstanding fees. The audit fees from the trial balance was 120,000. So the solution for this one, what we do is we take the 120,000, we divide it by 75, which is 100 minus 25, and we multiply it by 25 to get an answer of 40,000 Rand. So our answer is 40,000 Rand, and this is an accrued expense. We are owing our auditors 40,000 Rand, and we are going to add this to our income statement. Moving on to the third example, rent income according to the trial balance is 81,000 Rand, and we have received rent until the end of May. And rent was increased by 20% on the 1st of December. So this means that for December, January, February, March, April, May, for 6 months, we have had an increase of 20%, and the other months were normal. So let's have a look at our solution. Our 9 months were normal from the beginning of the year up until the end of November. And then 6 months, as just calculated, had the increase of 20%. So our solution will be 9 times 100, which is for the months before the increase, and then 6 times 120, which is for the months that have increased by 20. And this works out to be 1,620. We then take 120, which is our increased amount. We divide it by 1,620, which is what we worked out above, to get 81,000. We take 120, which is the increased amount. We divide it by 1,620, which is what we worked out above. And we multiply that by the 81,000 that we got from the trial balance. The answer from there is 6,000 Rand per month. And we multiply that by 3 to get 18,000 Rand. So our answer is 18,000 Rand that we are looking for. And this is an income received in advance. And we minus this from our income statement because it belongs to the next financial year. Our next example is advertising. Our advertising is 43,500 from the trial balance, and the company owes the advertising agency for the last 2 months of the year. and it was decreased by 500 Rand on the 1st of October. So let's have a look at our solution. We take the 500 Rand and we multiply it by 3. This is for October, November, and December, because we have not paid for January and February. Multiply it by 3 to get 1,500. We add that on. Because it's a decrease, we add it on. If it was an increase, we would have subtracted the amount. We add it on to 43,500 and we get 45,000 in total. This 45,000 we divided by 10 months. This is the 10 months that we have paid our advertising agency. That means it was 4,500 before the increase, and it was then 4,000 Rand after the decrease. I'm going to repeat that. It was 4,500 before the decrease, and now it is 4,000 Rand after the decrease. So we have not paid for 2 months. Therefore, we multiply the 4,000 Rand by 2 to get 8,000 Rand. So this is the answer we are looking for, 8,000 Rand, which is an accrued expense, and we add it on to this year because that is belonging to this financial year. Right, then just to remember about profit or loss on asset disposal, a reminder that you need to calculate the depreciation amount of the asset before the disposal happens. So this means you need to calculate how much you've used the asset before you sell it. If you've made a profit, many learners forget to add the profit on asset disposal to incomes. And if you've made an expense, you must also add that expense to your expenses. So please always remember, whether you made a profit or a loss, you must add those into your income statement. Then for provision for bad debts, you must always make sure that you check if you have any previous adjustments that are regarding debtors before you get to this adjustment. Remember that if we are increasing our provision for bad debts adjustment, that is an expense to the business. And if we are decreasing our if we are decreasing our provision for bad debts adjustment, that will be an income to us. Please always remember to write the word adjustment at the end. So you must write provision for bad debts adjustment. Now let's have a look at an example. We have provision for bad debts adjustment. We are told that it was 12,500 and it must be adjusted to 14,000 Rand. Let's have a look at the solution. So we are going from 12,500. We need to add 1,500, so we are increasing it by 1,500 to 14,000 Rand. Okay, so with this one, what you need to remember here is that we are going from 12,500. We are going by 1,500. This is the expense amount that you're going to put in there because we are increasing it. And we are going to 14,000 Rand. And this would go to note number 5. So this is our new provision for bad debts in note number 5. Lastly, for this lesson, we are going to look at calculating the correct net profit. This is something that is becoming very popular now in our exam questions, where we are given the incorrect net profit and we are asked to calculate the correct net profit. So just a reminder that if it's an income, we must add it. If it's an expense, we must subtract it. If it's an omission, something that was forgotten, you must do as you would do normally. Now, the trick here is to remember these two things. When it's an asset, meaning that if we're looking at an accrued income, a prepaid expense, and consumable stores on hand, those three are assets, and you must add whatever you've worked out for the assets. And then if it's a liability, this means accrued expense and income received in advance, this must be subtracted because it's a liability. So the easiest way to remember this is our assets starts with an A, you must add, and then our liabilities, the L, you must make it less. So you must subtract the liabilities. Let's have a look at an example, short example of how to work this out. Okay, so the question says, the incorrect net profit was given to us and it was 3,434,000 Rand. Our year ends on the 28th of Feb. We have 5 transactions we are going to look at. The first one is rent income. Our rent income is 87,010 Rand from the trial balance. It was increased by 10% from the 1st of November, and rent for Feb was not recorded. So that is what we're looking for, the rent for Feb for this example. The second example, we are given that telephone of 1,180 was not taken into account yet. So we are given that amount, we don't need to work it out. That is an accrued expense. The third one, unused packing material of 2,550 was not recorded. That's also given to us. That's our consumable stores on hand. Our fourth example is insurance. It includes a policy of 7,800 and it expires on the 30th of June. So that means we have prepaid for our insurance. Our fifth example, audit fees, was recorded as 45,000 Rand instead of 54,000 Rand. So that's a correction of error that we're going to fix. And then lastly, they're telling us the income tax for the year is 1,031,232 Rand. Let's have a look at all of these very quickly. The first one, our rent income, we had 8 months that were normal, and we had 3 months that had the increase of 10%. So when we add that together, we get to 1,130. So we say 110, which is the increased amount, divided by 1,130, and we multiply that by 87,010 Rand. So that is 8,470, and that is an accrued income. Our tenant owes us money, so because an accrued income is an asset, we are going to add that to our statement. Secondly, the telephone, it was given to us as 1,180. We know that this is an accrued expense. An accrued expense is a liability, and we are going to minus that amount from the statement. Thirdly, we have consumable stores on hand. The consumable stores on hand is 2,550, and that is an asset, and we are going to add it to our statement. So the important things we are looking at here is the 8,470 for the rent income, the 1,180 for the accrued expense, the 2,550 for the consumable stores on hand. Then lastly, number 4, the insurance. We have prepaid for 4 months because our year ends on the 28th of Feb. So we have paid for March, April, May, and June. So 4/12 times 7,800 gives us 2,600, and that is a prepaid expense. Prepaid expense is an asset, and we add our assets. Number 5, the audit fees. We need to do a correction of error. We recorded it as 45,000 Rand, whereas we were supposed to record it as 54,000 Rand. So we need to minus a further 9,000 Rand for the correction of error, and that we are going to minus at the end. And then lastly, our income tax, which was given to us as 1,031,232, which is an expense, and an expense we would minus it. So now looking at the final slide is that with our rent income, as we said, we are going to add the 8,470. We are going to minus the accrued expense, which is 1,180. We are going to add the 2,550, which is packing material, which is an asset. We are going to add insurance, which is an asset because it is prepaid. We are minusing the audit fees as we should have. We are minusing our income tax because it's an expense to us. And this is our final answer that we are looking for, which is 2,406,208 Rand. Remember that you start from the balance that you were given and you add or subtract to get down to the final answer. We have come to the end of our lesson. You can leave your questions on the comments and don't forget to leave the name of your school and give shout outs. Please share, recommend and subscribe to our YouTube channel. Thank you for watching and see you on our next lesson.